Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, January 17th, 2018. Wanted to take a look at commodities. We'll touch on the broad markets real quick. These are all. We'll stick with mostly the 60-minute time frame. I may jump out to a few daily charts, but these are the 60-minute time frames. These are all futures, so they're trading right now a little before the stock market opens. It's about 9:13 a.m. Eastern time. So these are gold futures. Yeah, here's a trend line that I'm watching right here, our most recent uptrend line. And the story on gold, if you go back in time, we'll zoom back out here. Pretty simple yet effective trading strategy of looking for divergent lows, which are bullish. When you have positive divergence on the indicators, that sets you up for a bounce or a rally. And then what you want to look for is negative divergence when that rally might come to an end. You might see the next correction. So there it is. You can see all the trend lines on the chart, divergent highs, divergent lows, simple yet effective. And now we've had a pretty strong trend over the last few months. So let's clear that out. So actually about the last month or so. So here it is back in early December, about December 12th, we started this trend. And you can see I have a trend line not super well defined because we had one little break, but there are quite a few reactions going back here from December later in the month and then so far in January. So let's watch this trend line. Gold is dancing on it right now. And if we zoom in a little more, you can see we had a divergent high back here. And again, this is only a 60-minute chart. So this isn't multi-week, multi-month swing trades. These are usually days, maybe a few weeks in a couple cases here. And not only are the moves on the 60-minute chart or any move commensurate with the time frame you're trading, meaning if you're trading off a daily chart, you're looking for, moves that may last for weeks, possibly months. And if you're looking on a weekly chart, you're looking for trends that can last many months, even years. So now the 60-minute charts, you had a divergent high here, and that was good for a pullback of about one, I think a little less than 1.5%, about maybe 1.3% drop right there off this divergent high. So now here's what I'm looking at. We have this divergent high right here. We have a couple things. We have a potential double top, not on a large scale, like double top patterns I like to see on a daily chart, but what I'm looking at here is gold failed at the recent high right there. So we have two equal highs, and we did have at that point negative divergence because although prices made an equal high, we had much lower highs on the indicators down here, the MACD and the RSI. So that is negative divergence. Now, maybe we break this trend line again. That's the most important thing. If and when we break this trend line, and also will it be an impulsive breakdown? This was not an impulsive breakdown. Prices just limped through here and shot back. So if you look for a big red candle, multiple red candles, especially on the 60-minute time frame, you see impulsive selling. This is impulsive selling right there. If you see the trend line break and something like that, there's a good chance that now gold has started the next correction. Otherwise, the possibility exists, you can see the way I drew these trend lines here, that we may push up. If we find support here, go on to take out those previous highs, make a marginal new high, and then reverse. That will have also, we'd still have, I should say, negative divergence on that high. So my confidence on the near-term direction isn't very strong. That's why gold hasn't been a trade in recent weeks. I'm just watching this one. I think that the upside is still limited. I think that the risk reward is skewed right now to the downside. I think a correction's coming, but we need to see trend line support give way. And there's also some horizontal support just below. You can see right around that level there. So what is that, about 13, a little about 1333 or so. That's what I'm watching on gold. Crude, sorry for the pause there. Crude futures. Here's the trend line that I'm watching right here. It comes off the December 14 lows. We have two trend lines actually. We have this trend line here. There's a couple reactions. This one may or may not come into play, this trend line right here. The other trend line I'm watching right here, this one has broken down. You can see quite a few reactions on that trend line, and prices have broken through. That trend line starts back here. A couple reactions over here. Another reaction there, and finally prices broke below that one. So the support levels are below; they're marked. So I'm near-term bearish on crude. This could morph into something more when I look at the daily charts, but as of now, these are my let's just say my minimum pullback targets and levels where I expect a reaction. And so I think crude comes down here to that 62.19-ish area. Possibly down here, so call it around 62. I have a line also around 61.77. But you can see the divergent high. You can see the negative divergence that was in place at those highs. And this tells me we're looking at more downside in crude in the coming days and possibly the coming weeks here. Here's natural gas, nat gas futures. Here's a potential trend line to watch. We had a few reactions back here, but I mentioned in the trading room the other day that the 321, 322-ish level, you can see the black line right there around 322. It's a pretty significant resistance level. We did, that was Friday. I think we hit that, pulled back over the weekend into yesterday and bounced. We're making another run at it. Now, you can see that we do have, I should point out too, we had divergence at this high right here. You can see the negative divergence down below on the indicators. If we punch through that level, we'll still have negative divergence. So here's another example. And usually, I'll tell you, my hunch is we are going to punch through it. We're trading right now at the 319. And I think we'll probably take out that 322 level because we've tapped on it so many times already. You can see as I zoom back here in time, we've had quite a few failures there. Um, but I can see the possibility and lean towards a little breakout there. And then those divergences indicate that that breakout's likely to fail unless nat gas can just power on through there. Remember, resistance once taken out then becomes support. So let's see what happens if nat gas takes out. I'm standing aside this one. It's been an excellent trading vehicle for the last month or so. I've had numerous trades on this, by far mostly successful. That it's because nat gas has been trading very well off the technicals. A lot of those setups I posted in the trading room, covered it recently on the front page. But right now, like I say, I'm leaning towards that breakout. I just don't, not so sure it'll stick. So I'd like to see what happens with nat gas. Just sitting aside watching this one for now. Okay, and we'll just keep it quick. Wrap this one up with the broad markets. These are the S&P 500 futures. You can see back here. Looks like earlier in the month we had a small divergent high. Again, we're on the 60-minute time frame. You see a pullback. And so this trend line, at that point, we've had a couple reactions here. Not the best or most well-defined trend line, but yet it looks like so far we're back testing that trend line. So let's see what happens here. My expectation is for a rejection off this trend line, off this back test. That also meshes with my analysis on the Nasdaq 100. You can see the divergent high there. Very impulsive selling yesterday. Big reversal in the markets. Um, Relatively speaking, we've seen just a slow, steady grind. So again, nothing to get excited about, but with the VIX being so low, volatility low lately, that was a pretty noticeable reversal intraday. And so far, we're back testing that trend line. And if you look closely here, I have two. You can see there was this little sideways trading range right here. And so the top of that trading range, as well as the bottom, are significant levels. So we'll call this a resistance zone. And right now you can see a little 60-minute candle forming, a bearish engulfing candle that is. So look for more downside, especially if they sell this at the open. We've got about 8 minutes till opening bell. I'll try to get this video out quick. And we'll wrap it up with Nasdaq 100 futures. So if you're trading QQQ, the NQE minis, this is your vehicle. And you can see on a 60-minute time frame, this is negative divergence right here. We had a divergent high. Prices continue to push up. That divergence continued to build. Some call this double negative divergence. You have two consecutive divergence, but either way, you can see the divergence on the RSI as well as the MACD. And you see that impulsive reversal yesterday, a little kickback rally. I posted shortly before the close yesterday in the trading room. This looked like a bear flag. Now it's gone a little bit too long to be a bear flag continuation pattern. I had it about right here at that time. Either way, it looks like a not very impulsive kickback rally. And you can see just like on the S&P futures, you have this recent consolidation zone. Let's just watch that area. My expectation is that the NQ will turn down here, but we can go up. We may want to backtest that trend line. This one's a little more well defined. We have a few reactions down here, reaction here, reaction here. Either way, we're down below trend on the 60-minute chart with negative divergences. So I do favor more downside. Here's the targets. My preferred swing target right now, or I should say my minimum pullback target at this time, is this 6704 level. So I think we might see something like this. In fact, we already had a bounce there at that 6743-ish level. So I think the door is open now to take that out since we already had one reaction. We may get one more little hiccup there, but this is where I think we go. So if you are short the NQ from yesterday or QQQ or anything else, this is an objective place to cover. The trend still, the primary trend is very strong. So, I mentioned shorting NQ yesterday, or I believe I did. And that's where I'm looking to cover right back just a hair above 6704. And then we'll see. We'll take it from there. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.